FY21, FY22, these were 2 years which were actually impacted because of COVID. As you would be aware, most of these periods, educational institutes remained shut, and hence the demand for stationery products decreased significantly. It's more of a base year sort of a effect rather than growing 100%. The base figure was wrong. In FY23, with the educational institutions opening up, we continued to see good demand for our products. Plus, during the COVID years, the company had continued to do capital expenditure to enhance our capacities. So in FY23, due to increase in capacity, a little bit of effect of the pent-up demand, we were able to increase our sales by almost 100. Like I said, now this is more of a normalized period. That's why we believe from a guidance perspective, we will be doing about 25% growth in our sales. And so that would be the same. And sorry, Chinmay, I missed your second question. If you could just working capital. Yeah. So in terms of working capital, the change that you see has been primarily on account of our entire domestic general trade segment, where we used to extend a little bit of credit, was moved to a cash and carry advance sort of a model, because of which our debtors days went down significantly. Also, in terms of inventories, with the company's operations being more increasing, there was a better inventory utilization that we could do. As a result of these factors, predominantly working capital reduced. Our current working capital is also close to that, about 37 to 38 days. And going forward, our range would be about 40 to 45 days, considering that there are certain products where, we by choice keep a higher working capital, higher inventory levels, and that too only in raw materials, because there are dependency on certain natural resources. So when the sales of these products increase because of capacity addition, then the working capital days go up. In terms of debtor days, we are still at that average of 12 to 13 days only.
Got it, sir. That's really helpful. Just lastly, if you could comment on, as a company, how do we differentiate ourselves from our peers? Just trying to understand whether the future growth is supposed to come from taking the market share from other companies, or, is there enough market for everyone to grow?
Firstly, we never try to compare ourselves or place ourselves with our peers. We believe in, being ourselves. Whenever we would want to launch a product or launch a category, we always believe that we look at what our consumer are, who our consumer, and we understand our consumer much better than anybody else could do. So therefore, we know basically what is the requirements of our consumers, and based on that, we design products, develop products, and this everything happens in-house, right from designing to development and to, conceptualizing, manufacturing. We have a completely backward integrated operation. So as a result of this, we become very efficient, and this is seen in the pricing of our products also. So we are able to give a far more superior product at a very good value to our consumer, which brings them back to DOMS. So that is one of our key success factors, which is a mix of, like I said, our manufacturing capabilities, our design capabilities, our understanding of our consumers, and this is what we want to continue doing for across all the products that we are into and we intend to enter into.
Got it, sir. That's really helpful. Thank you.
Thank you. The next question is on the line of Jinesh Joshi from Prabhudas Lilladher Private Limited. Please go ahead.
Thanks for the opportunity. Sir, I want to understand our capex plan a bit better, because if I look at our RHP, we had mentioned that we'll spend about 450 crores, and the plant will be operational by December 25. But if I look at our PPT, we have also mentioned that we have commenced a production at about 1 lakh square feet, which is within our existing infra, and additional 1 lakh square feet will become operational very soon. So what is the capex that is earmarked for this 2 lakh worth of area which is due for expansion, and which all categories will we be spending this amount into?
So, just to clarify, the RHP, what the plan was given was for the proposed facility and expansion in the newly acquired 44 acres of land. Out of the total amount which was given of about 450 plus crores, the company had already acquired the land for almost 75 crores. So balance was about 380 crores of investment, of which 280 crores was raised in the IPO. This project is, we just recently received the final approval which was required before commencement of construction. This was in terms of getting the town planning approval. So we are now soon expected to start construction on this newly acquired land, and the capex towards that building and construction is something which we will start seeing from the coming quarters. In terms of what we built in-house in our existing infrastructure, we had already acquired the land, and on these lands there was possibility of increasing, constructing 2 more buildings, which we did. One building of 100,000 square feet became operational, and we started getting revenues from this from the month of October. This building is purely for our writing instrument segment, where we've started with commercial production of the conventional ballpoint pens, and also increased slightly our capacity in markers and in brush pens. There is a building adjacent which is currently under construction. Construction is almost over. We will soon start setting up the plant and machinery at this building, and expect to get commercial production from Q1 2025. If you see, even with the first building, we were able to set up commercial production in a record time of 90 days from the time we got the possession of the building when construction was complete. Here also, we expect the same sort of a time frame. And again, this building, considering the demand for the pens that we've launched, is much higher than what we anticipated earlier. So this building also we would want to focus in terms of writing instrument to enhance our capacities in pens and the ballpoint pen segment.
How much are we spending incrementally for these 2 adjacent buildings which you just mentioned?
So in terms of construction, so like I said, so in terms of going forward.
So sir, this
here in the 9 months, like I mentioned, we spend about
170. No, sir, I get that. My question was, for this additional 2 lakh square feet which you have just mentioned, how much are we spending specifically for that?
In terms of construction cost?
Yes.
So one building is already ready and the construction completed, and for the second building, we'll be spending a additional expense would be of about 17 odd crore rupees.
Got that. And sir, last question is with respect to our working capital. You mentioned in your answer to previous participants' question that we have moved to cash and carry, and hence our receivable days have come off quite a bit. So just wanted to understand in terms of positioning, if we are on this cash and carry model, so to say, so do we offer a higher dealer distribution margin as compared to peers, or what is the point on which we are competing to get a higher revenue share? Because I think credit period and margins are the two things which essentially anyone would compete on.
So, honestly, right now we are seeing a very significant pull from the market, across our, across domestically or also in exports. There's a very strong pull for the DOMS brand, because of which, and what is happening with the retailers also is the DOMS products which they get, they are witnessing a fast turnaround. And as a result of this, the demand itself is very high. So in terms of margins, our margins from the channel would be in line with what the entire industry offers. The pure reason that we've been able to shift the entire trade to a cash and carry sort of a model has been because of the strong demand and pull for the brand and our products.
Got that. And so what is the industry-wide distribution margin, or for that matter, your distribution margin, the entire channel, if you can call it out?
So our margin, in terms of there are certain products, different products have different margins at the retail level, but at the stockist level, our margins are about 5.5%, and at the distributor level, it is 9%, and then for the retail level, it's different across different products.
Got that. Thank you so much, sir. Thank you.
Thank you.
Yeah. Rahul bhai, Aniruddha here. Some questions from my side as well. In terms of branding initiatives, so while the growth has been very, very strong, and as of now we are not investing in ad spend, but now new capacities are coming on stream. So will there be any change in the plan in terms of the branding initiatives?
So, Aniruddha, as you know, historically also and now also, our marketing and advertising spends continue to be in the range of 0.4 to 0.5%. Till now, we've not seen the requirement for investing more in this with the new capacities of pens. Also, like I said, today we are being able to sell only to 4-5 states of the country. With the capacities, so the demand is already there. But if required in future, if we see, then there is the capability is there to increase the spend. But as of now, we don't see such a requirement. And whenever needed, like I said, our financial profile allows us to invest in this segment.
Yeah, sure, understood. Secondly, in terms of the pen rollout, the 5 rupee pen, I guess it was initially in Gujarat market, and now how do you see the progress in terms of the rollout on a pan-India basis, and any growth targets that you have in the mind that you can share on the pen business?
So, Aniruddha, right now, initial rollout was definitely from Gujarat and then MP, and till now we've started selling in about 5 states of India. Today we have one building is already ready and doing commercial production of pens since October. Another building will soon be ready there. Once those capacities come in, that is when we'll expand to other states. But here also, like when we spoke about our retail footprint, here also the idea is same. Wherever we enter, whatever state we enter, we want to take a position of significance of leadership, justify that position, and only then move to new territories. So that's the same strategy we'll follow. Like I said, the initial response has been significant. We are happy with it, and we believe this to be a key segment for the company soon.
Sure, understood. In terms of the revenue salience of the premium products, for example, in case of premium pencils, the pricing of, let's say, 8 rupees and above, we can, let's say, if we consider as premium and luxury. So, if you can indicate the company's revenue share from the premium products and how it has moved over a period of time. Also, in case of these relatively premium products, what will be the company's market share versus the other brands into the market?
So, Anirudh, honestly, at the company level, we not want to track it at such a micro sort of a level. Today, in terms of when we talk about pencils, the 6 rupee MRP pencil continues to be the largest selling, product segment for us. New capacity is also coming in. It's well distributed across those segments. But specifically, how much market share or how much sales coming from that specific segment, that's something which we don't, wouldn't want to track and differentiate into.
Okay, sure, sir. Just two more questions from my side. One, in terms of the toys business, so any update on that progress? How many new products that have been in a way rolled out or are in the pipeline? And in terms of distribution, where are we as far as the toys distribution is concerned? I agree it's a very recent acquisition and still a lot of work needs to be done. But if you can share any pipeline, let's say for FY25 or so.
So, Anirudh, like we initially discussed, toys, the acquisition that we did was to understand this market, understand the product, and to see how these products can complement with our existing distribution network. So towards this, we a lot of product redesigning is happening. A lot of products are being packed in such a way that they become attractive for retailers to have in their stationery shops. We've already started selling Clapjoy products in our existing distributor network, especially in the north market. The initial feedback has been positive, and that is how we are thinking of expanding this segment, rolling it out on a pan-India basis. So going forward, though very small now, but we are optimistic that in a few years' time, this segment would be attractive and decent in terms of size. And once it becomes larger, I think we will start discussing more in terms of numbers with respect to this particular segment.
Sure, sir. Understood. And very last question from my side. Now the market shares of the key products of the company are not very easily available in public domain. So if you can indicate the likely market share gains in this quarter or let's say in 9 months, it will be. Any further color on that, means in terms of which are the products would have gained market share or which are the regions where you would have gained the market share? Even if you don't share the numbers, it's fine. Just a qualitative feedback is also very appreciable. Yeah, that's it from my side. Thanks.
Honestly, Anirudh, like you said, it's very difficult to track the size of this market. Therefore, we would also not have a lot of information in terms of the size of the market and which segments have grown. In terms of DOMS, what growth we've achieved and in which particular segment, that we've already disclosed in our presentation. So I think nothing additional to add in terms of market size, unfortunately, because it's not something which is readily available.
Understood. And any guidance that you would like to roll out for FY25 in terms of revenues or margins as such?
So as mentioned earlier, in terms of revenue for FY25, we would want to guide close to that 20 to 25% sort of a range with an EBITDA margin between 15 to 17%. So we always believe good to be a little conservative and deliver something better which will create a wow factor for everyone. So we'd want to follow that as well.
That's really actually a great guidance. Yeah. Thank you. Thanks from my side.
Thank you. The next question is on the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks. I was looking at like segments. It looks like art material and office stationery seem to have done well with like say upwards of 35%, 40% growth. So what's happening here, and is pen contributing to the office stationery sales?
Yes, Kunal bhai. So, pens is a part of the office supply segment. So, like mentioned, we added capacities in pens. Therefore, you will see, growth in that segment. In terms of art material also, there has been capacity additions in our crayon segment, in our watercolor pen segment. So these capacity additions, coupled with slight increase in the ASPs, has led to that growth.
Okay. So wherever you are adding capacity, you are immediately seeing growth so far. How big is pen right now? I mean, like say if you look at 3Q FY24, what will be the contribution and how big do you see it happening in FY25? Considering that you have visibility on capex, and if you are able to sell what you are producing, in that case, how big can pen become in FY25 versus FY24?
So, I can talk about the current quarter. Like I said, pen is something new, so we'll want to take it step by step as and when we launch it. But in the current quarter, if I have to say, we did about 16.5 crores of revenues from the pen segment.
Okay. And how large a capacity are you like deploying on the pen side? Are you looking to double, triple? What kind of capacity increase are you planning for pen?
So in the current building that we've already started, our capacity is 1 million. The new building that we will now, come into commercial production in the next quarter, in first quarter of FY25, that would be additional 1 million. And then would be the new capacity that would come from the 44-acre plant, which would be about 4 million. So double of what we will have in the existing infrastructure. So eventually we'll target to have capacity in pens of total of about 6 million.
Okay. So right now it's 1 million and you're doing about 17 crore of sales, and it will be 6 million. So like assuming that like say it's a linear increase, in that case you're looking at a much larger number.
Even what would happen, Kunal bhai, is not the entire capacity was started from day one. It was enhancement over a period of time. So I think once we have a couple of quarters go by in terms of full-fledged production, then we'll be able to guide on this number a little better.
Understood. Okay. And you mentioned that microwood contributed to the improvement in margin in 9 months. What was the revenue contribution, or like say if I want to look at just the organic revenue growth, how would that be compared to what you reported?
So basically, if Microwood, our subsidiary, basically is into manufacturing of tin box and paper packaging and boards. So basically, most of these products are sold to DOMS and our other subsidiary Pioneer. So about 98% of the sales of Microwood goes to DOMS and Pioneer only. So there's no material increase in sales because of the acquisition of Microwood, but it is purely because of the elimination of margins on consolidation that you see the benefit at the operating level.
Understood. So there is a margin impact, but not really a...
Not a revenue impact, it's a margin impact.
Understood. And lastly, if I look at most mass consumption categories, we've seen a slowdown in the last few quarters. Are you seeing any slowdown at all? I mean, I understand that, like, say, through market share gains, you might be going fast, but otherwise, what's your view on what's happening in rural markets as well as mass consumption categories?
It's absolutely in line with what it was earlier. What we were doing earlier, we continue to do so. We see the demand be healthy and strong for our products across markets, rural, urban, A+ cities, everything is pretty much similar. It's healthy. We have not seen any sort of slowdown, as to say.
Understood. And lastly, if you can make some comments on international as well as exports potential in FY25, how are you looking at it, especially with the additional capacity which is coming in? Would you prioritize local market, or do you have some big plans for international markets in the near term?
So, since the time we launched DOMS brand, our focus has been domestic, and that we'll continue to do so. We believe that the opportunity in the domestic market itself is significant, and with the right sort of product and offering, we will be able to capitalize on this significantly. So that focus will continue to remain in the domestic market. Export also has a lot of promise, but we'll be very conscious in terms of how much we want to do. It will not be at the cost of the domestic market.
But now that you have the capital, why not accelerate the investment and capture the international markets also at the earliest? Or do you think that...
Like I said during the introduction part also, today at the speed at which we are commercializing operations, we commercialized our pen plant within 90 days from the day we got possession of this plant after the construction being over, which would be probably the fastest in the industry. So definitely, like y'all, we are also very excited about the potential and would want to do this as soon as possible. But then there are certain things which take their time. You could not accelerate it significantly. And we don't want to make any mistake in this entire journey.
Understood. And what's the net cash as of 9 months FY24?
Our net cash as on 9 months, which has an impact of the IPO proceeds. So, there's about net cash of about 430 crores with a net debt of about 156 crores. So if you net it off, that's the cash position.
Understood.
But that's
So
not
cash
a
of 430 and debt of 156. Okay, so net number.
From the IPO which came in.
Understood. Okay. That's it from me. Thank you.
Thanks.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for the closing comments.
Thank you. Thank you, Anirudhji, ISEC team, and thank you, Lisa. I would like to once again thank all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any additional clarifications or feedback that you all may have. Thank you once again.
Thank you, everyone.
Thank you, members of the management team. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.